So let's talk about the market performance so far in 2023 as of today, July 26, 2023, with a particular eye towards how small caps have performed. Here is a graph of the three market segments that I track on a year-to-date basis through July 26th. As you can see, the small caps started strong in January and February and really led the way into the new year before starting to decline through the end of April into May, and then finally bottoming out in May before resuming their upward trajectory in June and landing where they are today, up just under 10% for the year to date. The EFA, the Europe Australasia Far East International Index, the index of international stocks, large cap stocks, also started out strong and has proven to be much stronger so far this year than we've seen in many recent years, ending this period up about 12.5%. And there's the S&P 500, which was buoyed by news that the bear market for large caps and American stocks in general was finally ended and is up almost 19% for the year. So kind of inverting where we were last year, where small caps ended the year strong. Now, large caps are leading the way, and that June rally for small caps hasn't quite delivered us back to where we were earlier in February when you look at the S&P Small Cap 600 Index. Of course, the strong economic reports that came out in June and a general belief that interest rates aren't going considerably higher really helped small caps, especially in the summertime period. But the market has been very good for the small cap informer universe, and of the 12 stocks that we focused on so far in 2023, all but one of those are in positive territory, and 6 out of the 12 have gained greater than 20% since they were recommended earlier this year. And the sole laggard, South State Bank, down 2.9%, but today, Wednesday the 26th, this morning it was up more than 4%, with generally banks rising on good economic indicators. So that profile of South State was published in the April issue, so nothing to worry about. There's still a dividend that's getting paid. But there is still lingering concerns about banks and regional banks in particular after the high-profile bank bailouts that happened earlier in 2023. So all in all, that's a great track record for the stocks that we've focused on so far in 2023. We'll talk more about the focus of those companies and how they've held up over time in the outlook as we go a little bit further. But I always like to remind subscribers why we focus on small company stocks and why you should include a healthy allocation of small company stocks in your portfolio. This is the 21-year track record of the S&P Small Cap 600 versus the S&P 500 and the EFA index. And you can see small caps remain on top over the longer term. And that's what we like to see. And we like to build that portion of our portfolio by investing in high quality small company stocks that offer a good return.